Saurabh, can I quickly get you in on the other aspect, which is telecom? There is again a bit of a mixed view on Airtel, the pure play telecom company. So I'll talk to you about that. What do you expect in the quarter? Could there be negative surprises?
Okay, so there's unlikely to be positive surprise, let's put it that way. So there wasn't really any major pricing action in the quarter. So you should see some ARPU improvement happening in Bharti by the organic mix improvement as the 2G to 4G upgrades continue for them. But yeah, in the absence of any major tariff hikes, we aren't looking at any major significant positive beats. Obviously is on pricing action. There has been chatter for the last couple of months that tariff hikes should be coming. I would say the general expectation maybe was that in November and December you could have seen some pricing action. That's usually been the case over the last 2-3 years, where towards the end of the calendar year they announce a tariff hike. That hasn't happened this time around. Maybe there's a bit of disappointment around that. Our own view is that it's not something to be particularly worried about. As I was also highlighting in the case of fuel prices, the inflation base effect starts getting a bit more favorable in India after March. So it's always possible that you could see some pricing action happening then. Secondly, coming to your point on consolidation, that's still pretty much happening. There are market share gains for both of the key large players. And the third player, Vodafone Idea, there has been a fair bit of news on delay in their capital raise, primarily because of delay in the conversion of government interest to equity. So it appears like things there have just stalled for now, and it's a bit of a stalemate. And the longer the capital raise gets delayed for them, market share losses could continue for them, which then benefits the two stronger players. So overall, we remain positive on Bharti. We still believe that tariff action should be a positive for the stock. We believe valuations at 8 times 1 year forward consensus EBITDA are still fairly reasonable, especially in the light of EBITDA growing at mid-teen CAGR over the next few years.